Welcome everyone to another season of the Brain Fruits podcast. In season 3, we will focus on how to achieve the Sustainable Development Goals. And this is really a cool episode, I must say, today, because as guest, I have Dr. Marta Ra. She is the co-founder at Women in Sustainable Finance. She's also a social entrepreneur and a TEDx speaker. As always, you can listen to Brain Fruits on all major platforms, Apple Podcasts, YouTube, and Spotify. But now I would like to welcome you, Marta. It's such a pleasure to welcome you to the Brain Fruits podcast.
Thank you very much, Hannah. It's really a pleasure to be here with you today. I'm really excited to speak about sustainability with you.
This is a really interesting topic, I think. Women in sustainable finance. How to make it in the green economy. Marta, you started out with a diploma in business. You went to get your Ph.D, you worked in banking, even in psychological rehabilitation, and co-founded the Women in Sustainable Finance. Can you tell us a bit about yourself and what got you to start the Women in Sustainable Finance initiative?
Sure, Hannah. So first of all, I have a classic background. I studied finance and business administration, and I have a Ph.D. in risk management. I worked in several international banks in wealth management and institutional banking. And in the last bank I worked for, I was also in charge for the strategic topic of women. And while I was working in the banking industry, I realized that there is very few women in executive positions on the corporate side. And on the client side, I realized that women are often excluded when it comes to investing, since money has traditionally been in the hand of men. But I know what the power of money is and how money can change and impact the world. That motivated me to do something about it. And there were two values that I wanted to bring together, which is women and finance, because I believe combining feminine energy and finance is what is needed in today's world. We all maybe remember Christine Lagarde's quote, if Lehman Brothers was more Lehman Sisters, we wouldn't have been in this situation during the crisis. So I think women and finance, the combination is actually a very unique one. And this is also why how Women in Sustainable Finance came into existence. So Women in Sustainable Finance was founded by my three other co-founders and myself. We met actually during a finance course at the University of Zurich, and we discussed how little women are working in the finance industry and how it is male dominated, and how we were concerned about the negative impact of investments on the environment. And at the same time, we found out that we have a great interest in sustainability as women, and that it was not such an interesting area of finance for men at that time in 2019. And so we said, okay, let's do something about it with our passions, with our feminine energy. And that was the spirit of collaboration. We had trust in each other. We had a common understanding. And instead of competition, we wanted to support each other and share the experience we shared within finance. And we decided to create this network. And this is how Women in Sustainable Finance became a global network with the goal to transform the financial industry and also to inspire women and men who share the same vision for a sustainable and inclusive world. And we offer different courses on sustainable finance. We also offer mentoring and coaching for our members. And the people who join us, they act on their convictions and believe that if we do this together, we can achieve great things together.
What an introduction. And I love that you mentioned Christine Lagarde. I think that she is such a great role model. And of course, she also has a podcast, which is, who would have thought that the leader of the European Central Bank would start to have a podcast and interact with all these social media platforms, LinkedIn, Instagram, and Twitter. And I think it is so interesting, as you say, the focus of women supporting women in finance particularly is something that we definitely lacked. We can see a bit that from the COVID-19 pandemic, especially, there was much more focus all of a sudden on the widening gaps across like socioeconomic groups. And we could see that global leaders started to look much more, where is actually our money going? And as you say, money has such a big power. Where money goes, power goes, and also attention goes. Mm-hmm. So with like COVID, priorities kind of shifted permanently. We started to look more into investing. As a result, now we have the value-based ESG investing. Like we look more into environmental, social, and governance-focused funds. So they take a bit the center stage now and even start to outperform some other investment strategies. Can you explain a little bit to me, like maybe I would be okay to invest some of my money? And I know there is some sustainable options available. How much and why should I look into sustainable portfolios?
Mm-hmm. So first of all, I would advise you to invest 100% of your funds in a sustainable portfolio, because short and long term, it makes absolute sense for you and for the planet and for the society. Obviously, there are options and ways to invest your money in the short term and get fast returns, but they are not really in particular sustainable. So if you are having a ethical view and you would like to invest sustainably, definitely go 100% into sustainable portfolios. And as you said, ESG is now a mega trend and it's here to stay. It's not just a marketing gag anymore, maybe 2-3 years ago, and this is here to last. And a few years ago, just niche players were offering ESG-focused portfolios or impact investing, and now also the big players have followed. And today, as you said, ESG is the buzzword. And empirical evidence shows that performance of ESG portfolios is in no way inferior than traditional portfolios. It's just actually the other way around. You can do well and you can do good at the same time. It's just a matter of perspective. What means good to you? What are your values? And where would you like to put your money in? And often the question is, does sustainable investing lead to lower returns? Not at all. It's always a matter of perspective and time span. It can actually be the opposite. So there are empirical results. There are many studies, and the results, we must say, they are mixed. But it shows that ESG-oriented portfolios lead to non-negative risk-adjusted portfolio returns. And some results even suggest that ESG portfolios lead to excess returns, suggesting that they may have even outperformed traditional portfolios. But again, I want to say there are different empirical results, and we should always look critically at them. So we can definitely say there is no trade-off between sustainability and good investment performance.
Talking about trade-offs, I think like this is a common mindset that I encountered, you probably encountered, many people know of, that just think, oh, if I focus more on sustainability or even just the social component of the ESGs, I might need to forgo some of my returns. And as you just nicely highlighted, there is a couple of reports, such as from like McKinsey, they found in 2017, actually there is no correlation between lower returns and sustainable investment. But as you say, it's always good to look at the data yourself and remain critical. Now you say I should invest all my money into an investment fund, and B, probably it should be a sustainable one. What is the problem that you see here? Because like we still know women have historically lacked confidence in their ability to invest. So just confidence in their ability doesn't mean that they're not able to. There's a Fidelity report that shows that only 9% of women think they make better investors than men. And a study by Merrill Lynch, I believe, was conducted that shows 52% of women say they feel maybe confident in investments compared to 68% of all men. What's your take on that? Does it not sound like I first should look into my confidence and my ability to invest? Or what should I focus on here?
Well, there is a explanation to that. Well, historically seen, women have traditionally not been involved from the way how our society works in the management of money, because they were caretakers and nurturers. although they were very much contributing to the society or the economy, for example, in particular after World War II, women were, or during World War II, were helping with production, and after World War were building the country. But once everything was back to normal, women were sent back to the stoves and the kitchens. So this is a historical explanation. And the biological explanation is also that when the hormonal contraception pill was introduced in the 70s, women were finally owners and decision makers of their own fertility, which gave them a lot of freedom and which made them less dependent. So with that being at the start, I think depending on which generation of women we talk about, their confidence can be different. If we speak about more senior generations, yes, that could be true because they have never handled, because it was always in the man of the hand. But we speak about next gens or the youngsters, the Y generation, for them, it's totally normal to invest. Regardless of that, we don't learn actually in our school system how to behave with money, how to invest, what money is about, right? So nobody is teaching us. We should actually be educated at school to read and also how to invest or how to manage money. So even though I think you and I, we did not learn that in school back then when we were younger, nowadays there are a lot of courses out there and there are a lot of networks who offer education. And I don't want to say it's only about women, although biologically and historically it was more women that are not informed as or not educated about. There are different platforms and initiatives out there where you can get educated. But I must also defend the women in one point that still to date, most of the banks are have traditional relationship managers or client advisors who function and think and behave the very old school way. And when you come in, they speak in a different language. They don't have the empathy to understand that actually a person on the other side doesn't have a financial background and doesn't understand all the vocabulary. So I think there must be also education, retraining of the banking staff that needs to align more with the clients and less with their own financial world. So I don't want to say that today women are not interested or women don't care about money or not are educated. They're much more informed and much more proactive. There are so many female investment platforms out there already internationally in the US, in Germany, in Switzerland. So the situation is changing in the world and it's changing for good. So I'm very confident about this, that in a few years from now, our children will not have the same question, would not ask this question that you asked today.
Talking about rapid change and also our preferences to change, women getting more into the world of investment, what made you turn your banking career upside down and turn much more towards psychological rehabilitation and sustainable investment?
That's a very good question. I get asked actually often. So I was always into sustainability, but back then I did not use that word. When I was a teenager, I was part of WWF and Greenpeace. I was an active protester and activist. I would skip school in order to go to the protest and to be the first line. So I was always very much into sustainability, and my goal was to save the world. I didn't have a clue how to do that back then. And so sustainability was always with me. And I realized while I grew older and was educated that you need an education and you can actually save the world by doing the right investments. So this is the explanation how I went into sustainable investing. And the explanation of why I care about health, mental health, well-being. I was always passionate about the psyche of humans, about people. I wanted to understand why are people the way they are. And while I was writing my Ph.D, I also did a training. I'm a coach. I'm a trained coach. And so for me, well-being and sustainability actually goes hand in hand. I always say there is no mental health or well-being without sustainability, and there is no sustainability without well-being or mental health. And I think we have now realized this, in particular since the war in Ukraine, how much the entire world is in some kind of well-being crisis, somebody more, somebody less, and that we need to be well, healthy in order to do also the right decisions. And the decisions are the right investments in order to have still a planet in a few years from now and to give something also back to our children. So for me, sustainability and well-being and mental health actually doesn't contradict each other. It all goes hand in hand. So I'm very lucky and fortunate to be able to work in these two worlds that are actually one world for me.
One world. I think this is such a great perspective of yours, that finance and mental health or mental well-being do correlate, and they are actually super interconnected. It's just like, I mean, how much it affects your own productivity and your decision making, as you say, is so vital. I mean, there can be no mental health without finance. Having money is just a very basic need to buy stuff that makes you happy. And this old saying that you cannot buy happiness, to a certain degree, I think it's complete bullshit. It just depends on how you define your own happiness. Now, with ESG becoming a little bit of an investment star, some say it's greenwashing in some companies. What is the approach of the Women in Sustainable Finance cleaning this glitter off to clear out a truly sustainable investment strategy?
Mm-hmm. So greenwashing is still a big issue, right? The biggest problem, there is still no universal standard for ESG with generally accepted criteria in the world. And the fact is that the ESG seal or stamp or certificate can apply to any product that are not particularly sustainable. So you can go through the ESG lens on a weapons company or on a oil extraction company. You can still apply the ESG lens. Maybe they have 50% women in management and they have a kindergarten and they give their staff 1 week of well-being off once a year. So that all goes into ESG, right? So it's very hard actually still today to have a general view on that. However, there is more and more work done on standardization. One is the new standard is emerging within the EU, the EU Sustainable Financial Disclosure Regulation, which is really good. And I would advise that investors can and should use ESG rating agencies. It should be noted that every agency applies their own criteria, whether you're using MSCI or Bloomberg or whomever. Everybody comes with a different framework and comes also with a different conclusion. But however, we don't have a solution to that yet. So how ultimately it is still best to decide for yourself which criteria is central to your sustainable investment. This is what we advise always to people who speak to us on sustainable finance. So, for example, you as an investor, you can decide whether alcohol should be part of the exclusion or whether it's better to sell shares in companies that extract fossil fuels or to actively help companies to improve their carbon footprint. So you can buy Shell, for example, that is trying to theoretically, just as an example, trying to improve their carbon footprint. You could proactively buy their shares because you know that they are trying to change something about it. So there is different ways to look at it. And finally, there are also companies that are slow to shift their practices to sustainability. They are often not greenwashing, but under pressure from shareholders because we are still living in a world of shareholder-oriented views. And so they need to meet high profit targets, which holds them back in order to implement their sustainability strategies and gives them little maneuver and slows them down. So this proves once again that the key lies in the hands of investors who are ultimately the driving force behind sustainable practices. So in summary, there is a short list that you can make sure which you could apply and where you can really decide if you are truly investing sustainably. So there are 4 points that I would suggest. So one, what do you expect from your sustainable investment? Are you concerned about the Paris Agreement, the climate change targets, or is it more important how a company treats employees or how companies support social causes or all of these? So you first need to decide what you expect from your sustainability investment. And then always take a look at the fact sheets if you invest in a fund, because a fact sheets should say everything, but let's say, says a lot. So first, sometimes it's hard to decipher. Sometimes it's like reading in a foreign language, but take a look at the fact sheet and study them very well, because they must describe in detail how sustainable their respective financial products are. Then number 3, even more information can be found in the annual reports of companies. And this is not the way to make exciting regarding your sustainable investment decisions, but in annual reports, you can really find a lot of information about the strategy going forward of a company. And then ask your asset manager, and your asset manager can be your advisor in your bank. Your asset manager can your financial advisor, or it can also be your pension fund, because that's also an asset manager, right? So the more clearly you formulate your ideas about sustainability, the greater the chances that the products offered will meet your expectations. And I would like to give one more comment about the pension fund. Pension funds are so powerful. I always advocate everybody to go and reach out to the pension funds and ask them how they actually invested. And most of the people are not aware that a lot of pension funds have still non-green items in their portfolio. Let's call it like that.
What is a good question that would be very challenging that I could ask my bank advisor or maybe my pension advisor that would maybe kind of trick them, but also show me in a very succinct and simple fashion what I'm getting myself into?
So you could ask your pension fund, what investment strategy do you use? Do you apply ESG at all, first of all? Then if you do, what strategy do you use? Do you use exclusion strategy? Do you use best-in-class strategy? What is your focus? What is your short, mid, and long-term strategy? So I think you need to really bottom up ask your pension fund really what is their investment horizon, what is their strategy, and where they want to be in 1, 5, and 10 years from now. And actually, every pension fund should be able to reply to you to those questions.
I like that suggestion, and I think I will definitely use a couple of those when I go and talk to my bank advisor about my future investments. Now, maybe I'm not in the situation where I have a lot of spare money at the side, big bucks or small bucks. What can I do today, regardless of my financial situation, to take a step towards helping us achieve sustainability tomorrow?
So even if you cannot invest millions, you can actually do a lot. So we just spoke about the pension fund, right? Which is really important. But what you can also do is through your consumption, obviously. But another way, if you want to go through the investment route, is there are so many platforms out there like Yova Investments or Sage Fund, where you can invest with very little money and start already investing early. So I encourage everybody to reach out to a platform, to do a little bit research and start with €100 or some even allow less money. I think it's not about the amount of money, it's about the awareness and the signal that you send when you consciously decide to support a certain company by investing in it.
That is a great decision. It also sounds to me much more like a mindset shift, which our generation and also the one before us seems to finally get in the face of some of the catastrophes that are happening around the world. Having heard about your success story with women in sustainable finance, what are some recommendations and brain food that you would like to give to our listeners to start using money as a power, to start building the mindset of money as a power for better change, and particularly to change the way our sustainable future will look like?
So I would like to emphasize that investing sustainably changes the world and every decision matters. So every single one of us, whoever starts with little money, changes the world. And of course, there are many ways to change the world and the society, and sustainable investing has a way. And same goes for private consumption. I read recently an article that turning your pension green is 21 times more powerful than cutting your carbon foot and stopped fly or becoming vegetarian. So again, challenge your pension funds. But my suggestion for the change makers that are listening to your podcast is to contribute to the world by changing the system. Because only if we can change the system, we can really make a difference in the world and leave something to the future generations. Because if the same system exists going forward, it will be and it will remain greenwashing. So get involved, ask tough questions, become active in organizations, be an opinion leader, be an ambassador. There are different ways, but again, to sum it up, your consumption, your investment, your pension fund, and trying to change the system. And last but not least, you can join Women in Sustainable Finance, where you have nice opportunities to meet other inspiring change makers, exchange thoughts with them, and maybe start a project in order to move something into the right direction.
That is a really great recommendation. And I think especially joining Women in Sustainable Finance is a great idea. We're definitely going to put the link here in the show notes and encourage everyone to visit the website from Women in Sustainable Finance. Also to reach out to you on LinkedIn if that is possible. And we'll definitely put in the articles and books that you have also already recommended before. I am just left to say, I think this is a great topic. Using money as a power for good change, changing the incentive system means changing the future is a great way to look at it. Really great, very much impressed by your perspective and very grateful to have had this conversation with you, Marta. I'm only left to say a big thank you for being on the show and for supporting Brain Fruits.
Thank you very much, Hannah. It was a pleasure to be here today. Thanks a lot.